Good morning and welcome to IG's early morning call on Monday, the 29th of January. Coming up on today's programme, well, currency traders are cautious this morning and the US dollar is little changed ahead of the Federal Reserve and Bank of England rate decisions this week and US jobs data too. Also, it's US earnings season, of course, and this week the four most valuable companies are due to report. Investors will be keeping across that, and oil prices are at a near 2-month high as traders fear an escalation of Middle East tensions after attacks on oil tankers and on a US base. Well, first of all, let's start by taking a look at volatility this morning and see what the VIX is doing. Well, it's currently up 0.62% on the day, but since mid-November, you can see it's remained in a range between 1380 to 1606 at its highest, remaining rather muted despite geopolitical risks. Earnings from US semiconductor company Advanced Micro Devices on Tuesday could prompt some interesting volatility this week after the closing bell on Wall Street, though it's expected the release of the company's financial results will have a significant impact on its stock price, affecting the overall market sentiment towards the company. But anyway, more on earnings coming up, but with 30 minutes to go until the European markets open, this is how the pre-market is looking across Europe. Well, the FTSE 100 is set for a lower open, currently down 0.14%. The FTSE did close higher on Friday, and then let's have a look over at the CAC 40, France's CAC 40, slightly down as well, marginally, rather flat, down 0.02%. And Germany's DAX also set to open in the red, currently down 0.22%. Well, the DAX and CAC 40 also ended Friday's trading session in the green. Cooling US inflation and positive corporate updates helped European stocks last week, but the CAC ended up 2.4% Friday, and that was supported by a near 14% rise in LVMH shares on better than expected sales growth. And the DAX did less well, though, as German consumer morale fell last week. Gross domestic product readings from the Eurozone come through this week, with the German reading on Wednesday likely to command particular attention, and of course the Bank of England rate decision too. Well, let's have a look at how things looked overnight in Asia Pacific markets. So this was the picture. You can see equity markets all higher. The Nikkei 225 up 0.77%. Hong Kong's Hang Seng also up the same there. Singapore STI also higher, up 0.31%. Well, in Hong Kong, if I just pull up China's Evergrande chart here on the IG platform as well, because in Hong Kong, a court ordered the liquidation of China Evergrande Group after noting that the property giant had been unable to offer a concrete restructuring plan. Evergrande is the most indebted developer with more than $300 billion of total liabilities. So shares in the group were halted after its stock plunged over 20% this morning, down 20.87%. You can see there. And then major events this week, of course, include China's factory activity figures for January and Australia's fourth quarter inflation figures on Wednesday will also be keeping across in Asia Pacific markets. And then let's move on to Wall Street to see how things ended on Friday. So Dow Jones Industrial Average closed higher, but the S&P 500 and NASDAQ, the Tech 100, closed lower on Friday. So the S&P losing some of that upside momentum we've been seeing, and the NASDAQ also down, but Dow higher. The NASDAQ was weighed down by disappointing Intel earnings, the company share price dropping about 11% last week. And let's have a look at how things are looking this morning ahead of the Wall Street opens or sessions. Let's have a look. US 500 set for a flat open as well. Let's have a look at the NASDAQ US Tech 100, also just marginally higher, up 0.13%. And Wall Street, the Dow Jones also set for a slightly lower open, down 0.06%. So a mixed look there, rather flat. But this week, investors will be paying attention to the rest of the Magnificent Seven big tech firms' earnings reports from Apple, Meta, Alphabet, Amazon and Microsoft as well. In addition, the Federal Reserve will also issue its latest rate decision. Well, staying with the Fed and the Federal Reserve, well, it's expected to maintain its key interest rates at current levels this week. Fed funds rate, well, that's the target range is forecast to remain between 5.25% and 5.5% for a fourth consecutive meeting. Fed funds futures currently price in a 97.4% chance of no change, but there's a 59.7% change that the Fed will cut by at least chance at a 25% basis points at its March meeting. Well, the Fed hoped to navigate a soft landing. We've heard that word a lot recently in Davos as well, recently for the US economy. And its December meeting, well, the Fed shared its latest views in US economic growth. Full-year GDP growth is seen at 1.4% in 2024. The unemployment rate is seen averaging 4.1%. Meanwhile, it's also likely to continue to allow up to $95 billion in assets per month to reduce its balance sheet, currently standing at about $7.7 trillion, while still far from the pre-pandemic size of $4.15 trillion in February 2020. Well, then, on Thursday, the Bank of England is also seen staying put on rates. Governor Andrew Bailey and other top BOE members have been saying until recently that a rate cut would be premature. They're also warning about the risks from strong wage growth. That said, recent data on headline inflation, wages and economic growth came weaker than expected, which suggests the Bank of England could relax its line on borrowing costs. Well, some growth data is also on the cards tomorrow. German economy, well, that is expected to contract by 0.3% in Q4 quarter over quarter. The 0% growth from last quarter saves it from entering a technical recession. But this is a risk France and the Eurozone as a whole are running, with the French economy forecast to stay flat in Q4. Well, that is the latest forecast. On Friday, economists polled were anticipating a 0.1% fall. As for the Eurozone, GDP is seen contracting by a 0.1% in Q4 quarter over quarter after a 0.1% contraction the previous 3 months. And if we have a quick look at the euro US dollar price chart here, you can see this morning the pair is currently down, slightly down 0.04% on the day. On Friday, the pair touched its lowest point since the 13th of December last year at 10.85. The near-term technical outlook points to a build-up of bearish momentum and additional losses could be seen if it falls again below that level on Friday, 1083. Well, let's move on now, because this week there's also US jobs data due out, and there's a string of indicators released throughout the week, culminating with non-farm payrolls on Friday. Well, starting tomorrow with JOLTS job openings, these are forecast to come marginally lower than last month at 8.75 million for the month of December. This would be a fourth consecutive month of decline for this indicator, taking it to a level not seen since March 2021. Then on Wednesday, the ADP surveyed private US businesses are anticipated to have hired 135,000 workers in January, fewer than the previous month. While initial jobless claims will be published as ever on Thursday. And then there's the big one to end the week, non-farm payrolls. Well, early expectations are for 173,000 job creations in January. Remember that December data was a stronger than forecast 216,000, the highest in 3 months. The unemployment rate is seen rising to 3.8% from 3.7%, and average hourly earnings are set to rise by 0.3% month over month and 4.1% year over year. Well, on the whole, the market doesn't expect any big changes. The job sector is gradually weakening back to pre-pandemic levels, fueling the opinion of a Fed rate cut in the first half of this year, possibly as soon as March. Well, moving on. On the corporate front, Ryanair, well, watch out for its share price at the open in Dublin this morning, because Europe's largest airline trims its full-year profit forecast after some online travel agents, which Ryanair accused of adding illegitimate extra charges, have stopped selling Ryanair flights last month. Well, Ryanair now sees an after-tax profit of between 1.85 billion euros and 1.95 billion euros for the year to end March. In November, Ryanair had a forecast of 1.85 billion euros to 2.5 billion. Well, that would still beat its previous record annual after-tax profit of 1.45 billion euros set in 2018. Well, in Q3, Ryanair earned 15 million euros in the 3 months to the end of December, missing analysts' expectations of 49 million euros. Well, traffic in the period was up 7% to 41.4 million passengers. Average fares were 13% higher than last year. Now, if we have a quick look at the Ryanair price chart here, well, Ryanair's share price has gained about 32% since the beginning of November, but year to date is down about 1%. Well, also this morning, Philips has announced its latest Q4 results, and it's reached an agreement with the US FDA over the recall of ventilations. Well, just a reminder, in June 2021, Philips had to recall breathing devices and ventilators used to treat sleep apnea because of risks of toxicity. It was established that a foam used to reduce the noise of the device could degrade and become toxic and carried potential cancer risks. Well, the operation, well, it knocked its share price. Let's just pull up its price chart for you. It knocked its share price as investors feared large litigation bills. Now Philips has agreed a consent decree with the FDA. This decree will provide the group with a roadmap of defined actions, milestones, and deliverables to demonstrate compliance with regulatory requirements. Until the conditions are met, Philips will not be able to sell new respiratory care devices in the US. This also leads to a provision of 363 million euros in Q4. According to the group, the agreement will not change its earnings and free cash flow expectations. Well, in UK earnings this week, what can we expect? Well, on Tuesday, Diageo is scheduled to publish its half-year financial report, followed on Wednesday by GSK's full-year earnings. And on Thursday, we have Shell Q4 earnings, and there's a trading update as well from BT on its third quarter. And then moving on, because it's also a big week in the US on the earnings front, it will arguably be the most important of this US earnings season, with reports from the 4 largest US companies. On Tuesday, we have Pfizer, General Motors, Advanced Micro Devices, Microsoft, the newly world's largest company in terms of market capitalization, and Alphabet, the 4th largest US company and 5th largest in the world. On Wednesday, then we have Boeing and Qualcomm. Thursday, Apple, 2nd largest company in the world, Peloton Interactive, Meta Platforms, and Amazon, number 4 in the world. So you can see a big week. Additionally, as well, we've also got the 2 oil giants, Chevron and ExxonMobil, will conclude the week on Friday. There are obviously a lot more earnings expected in the next few days, but these I've just mentioned because they are all session stock on the IG platform, which means you can trade them from 9 a.m. until 1 p.m., giving you the opportunity to make the most of all reports pre and post session. Well, let's have a quick look at commodities and see how oil prices are doing this morning. First of all, let's have a look at Brent here and see what's happening with Brent. Well, it's up today, 0.37%, trading around $83 a barrel. And if we just move over to US crude, WTI, it's also up this morning, 0.41%. Currently trading around $78 a barrel. Well, oil prices are trading near a 2-month high as the market fears Middle East tensions could escalate. Oil prices surged on Friday as well on the news. An oil tanker was hit by a missile in the Red Sea. And on Sunday, a US base in northeast Jordan suffered a drone attack, killing 3 and injuring 34 others. Well, note that last Friday, Baker Hughes' total rig count increased to 621 last week from 620 the previous one. The number of active oil rigs, meanwhile, rose by 2 to 499. Well, let's have a quick look at gold this morning and see how that is doing. It's still above that $2,000 level, currently up 0.71% on the day. Gold has been confined, though, in a narrow trading range since mid-January. Delayed Fed rate cut bets underpin the USD and act as a headwind, while the geopolitical uncertainty and uncertain economic outlook have been lending support to gold, of course, seen as that safe haven asset. And then let's have a quick look as well at copper to see how that is doing on the day, currently down 0.27%, with pressure from a steady dollar ahead of US economic data, subdued demand outlook as well from top consumer of copper. China is also weighing on investor sentiment. Well, that's all we've got time for this morning on Early Morning Call. Thank you very much for watching. Do keep across all our IG platforms for more market analysis and updates throughout the day.